In this video, we will go over how to identify the high probability setups using price action. The very first thing I need to do is I need to identify the pre-market structure, because before I start trading, I want to make sure I understand the directional bias on the market, and it is all provided to me based on the pure candlesticks that are printed on the chart. Now we can see that this is the pre-market structure. The black line divides the yesterday session from today's session, and the structure is looking bullish. However, we open here and this is not a strong bullish trend. We can see a very deep bearish pullback, quite a deep bearish pullback. So this is very typical for the ES market when you see this during the pre-market structure and you can't find any good wider channel that would get confirmed, because this is only with two swing confirmation. You want to generally lean towards at first to a tight channel with the break new extreme, because it looks too choppy, it's not very strong. So for this reason, this morning I selected this channel with the break new extreme, and you can see I also draw the trend line to the correction. At this point, I'm no longer expecting this to be just a correction, because I have a break new extreme. I'm expecting stronger bearish downtrend, and notice it helps me to stay away from buying because I have a break new extreme and I have downtrend in play, so I'm not thinking even about going long. However, I can't really sell because this has been quite a decent bullish push, so I would need a confirmed downtrend first before I'm going to start even thinking about selling. So this is just area on the chart where the market is opening and I'm being patient and observing the price action develop. Okay, we're breaking lower, so at this point I have two choices. I can either expect downtrend to start, or I can see this as a first leg down, break, second leg down with a new extreme. So when I'm watching a situation like this with multiple variables, I'm going to observe how the EMA is going to react. If we push above EMA and there's going to be felt second entry short, I may consider thinking about going long. If there's going to be second entry short below EMA, I'm going to think about starting the bearish downtrend. Okay, EMA is rejecting, that is good for bears, and prices keep trending lower, and notice how far prices are heading. Okay, so at this point, I need to redraw a downtrend like this. I was playing with the overshoot, so now I expect a little bit stronger pullback. And also when I'm watching this, what is the overall pattern developing right now? Because you cannot just focus on the tight channels, you also want to make sure you're taking into consideration what is the main pattern for today. And the main pattern for today is shaping up to be a trend range, so I need to redraw the support and the resistance. Now, so I have a trend range, I have a short-term downtrend. So what am I expecting? I'm expecting significant pullback to the EMA first, to the key entry point, before I'm going to start thinking about selling. We have a new low, first entry short, pullback, second entry short. So this is a two-legged pullback, which would be high probability setup if it formed close to EMA. But we have a big gap between the EMA and the setup, possible overshoot too. I cannot sell. And notice prices keep trending lower. So at this point, I extended it just a little bit. And notice we have micro break and micro new extreme. So the downtrend created new extreme, and we didn't even capitalize on nice good short sell because we're still so far from EMA. We can't really take it. We need to see prices pull back to the EMA. Just because it worked here once doesn't mean that the next time it's going to work. Okay, so downtrend played out. So notice I need to redraw the short and uptrend. So this is what I have to do. Just follow the price action based on the trend line rule, because we are in trend range. There is no bigger pattern, no bigger trend developing. So your goal is just to follow the tighter channels. When there's a break new extreme, you have to stop looking for setups with the direction of the recent trend and expect stronger correction or possible reversal. Okay, I'm just going to make it a little bit wider. Prices are breaking above the EMA. I have a new high, first entry long, pullback, and we have a second entry long. Now, this second entry long is closing one tick below the EMA, but because this is such a sideways and broad two-legged pullback and the downtrend played out with the break new extreme, you can see we have first leg down, break, second leg down. You can see this is the two-legged pullback. So on the way down, you're looking for two-legged pullback at the key entry point to sell. On the way up, we're looking for two-legged pullback at the key entry point to buy. So this right here is a two-legged pullback, second entry long. I'm going to mark it because if you're a little bit more advanced, you can risk it. It's not that important that it didn't close perfectly above the EMA. It's very close here, and close is close enough. So you can definitely consider taking the second entry long, because the uptrend right now needs to get new extreme. If you're not comfortable taking the second entry long, well, you're expecting to get a high-low confirmation setup that would confirm the second entry long if the EMA is going to hold. Okay, and now we have high-low confirming the second entry long. But notice on my chart, it is a doji So I can't really mark it as a high probability setup on my chart. However, if your chart has better bar here, more bullish, you can definitely take a high low confirming the second entry long. But on my chart, I'm going to be a little bit patient. The day is just starting. So it depends how strong the signal bar is, but this uptrend still needs to get new extreme. And it is high probability setup confirming the two-legged pullback. Okay, so it's the first thing I'm going to do. I'm going to measure this lag. I'm going to copy it, put it at the top, project my target, because you can see there are smaller two-legged pullbacks, but also the move tends to move in the form of a two-legged pullback. Okay, so we reached the measured move, so I'm going to be a little bit more careful. But notice prices are correcting to the EMA and EMA strongly rejecting prices. So when I was watching this, instead of focusing on a break new high, I can see that we have some geometric formation. So I'm going to redraw a shortened spike and a channel like this, because you can see it kind of spiked up. There's a series of geometric lows. The EMA aligns perfectly. And this is a very strong bullish rejection. So this right here is a second entry long, but can I take it? There are a couple of reasons why I want to stay away from taking this second entry long. But first of all, notice we have almost no room to scalp out before these range highs. And also it is part of consolidation. We've been working sideways for such a long time. I really don't like going long here. Also, you can see we just reached the measured move. So you need to be careful because this has been a trend range pattern. We don't have any strong uptrend. So it is going to be confirmed channel, or it is the larger two-legged pullback generates stronger bearish pullback. So this is what you need to take into consideration. So if you have more room to get out, you can consider. But because we have larger two-legged pullback, where buyers may take profit here and sellers may pick top, the second entry long is too sideways, no room to get out here, and we just reached the measured move. So I recommend being patient here. I was observing high low, but we never got high low, and you can see we take it lower, and now at this point it is no longer high low because we broke lower, and now we have triple test, one bottom, double bottom, triple bottom. Now when I was watching this, I didn't like this setup because it already bounced off the resistance, and once it bounces off the resistance again, I'm treating this more as a first entry long. Had there been no bounce, let's say the prices were in the middle and then turned down, I would have jumped on this. But I am going to mark it because you need to be a little bit more experienced to understand the nuance. So this is a triple test, one bottom, double bottom, triple bottom. The support is holding, EMA is holding, and you expect for prices to create new extreme according to trend line rules. So if you took this trade right here, because trading is about taking a chance, you're never going to avoid losing trades. So the odds are on your side that you're mostly going to continue higher. So if you took this setup right here, I can definitely see why. I can see the reasons. I just didn't like the fact that notice you already made it to the resistance. So I'm treating it more as the first entry long. If it didn't bounce off the resistance, let's say it ended here, I would have liked it more. So when I was watching this, I was thinking about second entry long possibly. Okay, but there is no good signal bar. Okay, and now we have another second entry long. Now, why am I still thinking bullish? Even though it looks like it is losing steam? Well, because this uptrend is in play, it needs to get new high according to trend line rules. And also small downtrend played out with the break new extreme. The support keeps holding, which means that a lot of buyers are buying in this market, and you're closing above EMA. But the signal bar on my chart has quite a bearish tail at the top. I wanted for this bar to close a little bit stronger, but once again, trading is about taking a chance, so you can definitely consider going long here, especially if you have slightly better bar. If you have slightly better bar, it's no brainer. The congestion is not that big of a deal. Why? Well, because you're buying at the very low of the trend range. You have a lot of room to get out, much room than when you enter here. So this is important. You're buying at the low of the range, multiple support here, EMA is holding, and the uptrend is to get new extreme and is a new high, first entry long, pullback, second entry long. So a little bit choppy area. You need to be patient here. If you took this setup right here, definitely worth a chance. You just got stopped out by one single take, but then you can re-enter on this second entry long. And the market created new extreme. So at this point, I'm going to pause looking for longs. If you have a second entry long, but we just have a break in new extreme. Now there's a chance that you can be playing a little bit wider channel like this, and it's fitting fairly well, but you want to be careful when you're extending it too much, making it wider, because next time you will do it and you will not read it correctly, you may get trapped. So if you're playing this is also a valid option for you to watch as well. But I was playing this one because this was such a tight trend range overall. And notice, I'm going to zoom back, what is right now happening. We are at the very top of the trend range, and We have first leg here, pull back, second leg here. And you can see to the very tick, the larger two-legged pullback is being measured. So what you're expecting right now for all the bulls to take profits. Let's see if it's going to happen. And market keeps massively selling off back into the trend range. So this is a good sign that the bullish trend played out. Or if you're playing the wider channel, you have overshoot, which means you expect stronger momentum in the opposite direction. And notice what we have: a strong push below EMA, you have one tick higher that's going to trap all the bulls, and a very strong lower high, great high probability setup confirming the failed breakout. But the only way for you to take it as a high probability setup is to make sure you're going to use limit order, because you really don't want to sell at the very low because the bar is big. So what you need to do is wait for this bar to trigger and drop limit order, 3-4 ticks back. You probably could have gotten filled if you didn't put it too far back. So it depends how you played it. But once the bar is so big, you definitely want to use limit order. And this lower high is confirming the failed breakout. And the reason why I like it is because we have larger two-legged pullback. So once you see these large two legs, that really tells you that the bearish push is going to be stronger. You have filled second entry long here, but the market is way too far below EMA. So at this point, you're very gambling because this lower high is at least right near the EMA. The failed second entry long is all the way down like this. And if I'm going to draw this pie candle channel, you can see you have overshoot. So expecting a very strong momentum to the downside. Okay, at this point, what are we expecting? We're expecting the second entry short for this downtrend. Let's see how EMA is going to hold. And EMA is not holding at all. And notice how far we are already retracing. So this is a clear clue from the EMA. And also I can see that the structure is creating low, high, low, high, low. So there is bullish imbalance in this market. You can see the downtrend created high, low, and a massive push above EMA. So this is giving me information that the market is way too bullish than expected. So at this point, I need to make my channel wider because we retraced so much. Once you retrace with a 50-61% mark, you can use Fibonacci tool. You have to adapt. So notice how far you retraced, how strong the bullish rally is, how the EMA is not rejecting at all, combined with the bullish imbalance. We expect for prices right now to be bullish. We have a failed second entry short, but the body is not at the EMA, and we have moved too far up. You want to see the failed second entry short somewhere around here, right after you push above EMA. So you cannot take it. It's not fully at the EMA. A lot of times when I'm seeing this and I see failed second entry short that has moved too far up and it's not at the EMA with the body, I'm expecting a second entry long because a lot of times there's going to be one tick trap lower and then the second entry long is going to form. So let's see if we can get the second entry long. We have a second entry long, but it is an inside bar. So I would like to see this bar triggering below the bear bar and then reversing. On this chart, this is inside bar, so not the best. It is not a horrible setup. You can make a case for it, but it's just not the best signal bar, unfortunately. But definitely, hopefully, it makes sense why you're looking for the second entry long here and no longer expecting the new low. You have to adapt. EMA rejected strongly. Okay, we have new extreme. And we are trading a trend range. We have a second entry long. Now, I was going back and forth if this is a tight channel with the break new high or the wider one. Even if you draw the wider one, you really cannot take it because you're at the top of the trend range and the signal bar is doji. So you got to be careful. Okay, I cannot take high low because it is an inside bar and I'm still at the top of the range. But you can see how the EMA keeps holding. The bulls are holding the important key level. But at this point, we have strong consolidation. Price action is going very sideways. You can see multiple bars stacked right next to each other. Had this bar at least triggered below this bar, you could have considered the failed second entry short. But, it didn't even trigger below and it's still part of this consolidation. So a little bit messy here. The market keeps trending higher. After that point, we had a very strong bullish rally. And you can see how the bullish imbalance is starting to indicate the prices will break higher. You have a short squeezed at the top of the trend range. So there's a bullish bias. Now, we have a very strong uptrend, but we cannot really find a good opportunity to go long because what we want to see is a two-legged pullback, second entry long right at the EMA, which is not forming. We only have a first entry long. By the time you get a second entry long, it's forming below EMA. So once you see second entry long below EMA, you want to see high-low confirmation above EMA, which didn't form as well. So you can see the prices just keep working higher. This is quite rare. You don't see this every single day. But today it happened. A lot of first entries working. And after there's a break of the uptrend, either the wider one, but the wider one is not really confirmed. It is the first two swings that will set up the trend line, but it's not confirmed. But we also have a spike and a channel that expects new extreme. So what I'm expecting after break, I'm expecting for prices to retest the new extreme. But I cannot be so eager to buy, definitely not below EMA. What I need to see is some strong push above EMA, EMA holding, and some nice failed second entry short, which never formed. You get a failed second entry short here, but the signal bar is bearish. It is too congested. It didn't break out of this congestion. The signal bar is very weak, so you can't take that. And then prices keep pushing lower. And once we keep getting rejected every single time, okay, I cannot deny the fact that there's a distinct bearish momentum. So I'm gonna redraw the wider downtrend like this. I'm gonna redraw the uptrend. And we have a break new extreme, a strong push below EMA. So at this point, I'm looking for lower high or failed second entry long. But by the time you get it, you have already moved too far down. And you're very close to creating new extremes. So you can't take it, definitely not here. You know, it's already, you know, too late here as well. So we can't really go short, which is unfortunate because you would be expecting a lower high here. Prices are forming triple test. New low was made, break new extreme. And the bulls are expecting right now to create the new extreme for this trend. There's a new low, first entry short, inside bar, so we can't take it, and a second entry short failure. Which after triple test, right here, the failed second entry short is a great high probability setup. It formed quite high up and not at the EMA. So only I can mark it as an aggressive setup because, you know, this is quite good context because we traded strongly up and the triple test is confirming the bullish momentum and such a strong push above EMA. So you can clearly expect the prices will push higher, and also it is right off the trend line. But you know, you generally really want to see prices closer to the EMA, so I'm gonna mark it more aggressive for this reason. But decent signal bar and the failed second entry short. I'm going to wrap it up. I'm gonna talk to you next time. Good luck with your trading.